2025 now behind us, some clear takeaways have emerged. Headlines, policy proposals, and new technologies can cause markets to move quickly in the short term. Declining markets cause emotions to run high, but can also create opportunities. As we settle into the new year, the economy continues to show signs of resilience and corporate earnings growth remains robust. The U.S. economy is likely to remain in growth mode in 2026 as it benefits from fiscal stimulus and potential continued easing from the Federal Reserve. Corporate executives have confidence in the long term, as evidenced by increased mergers and acquisition activity and the strength of earnings growth from the S&P 500. While valuations entered the year evaluated compared to historical averages, the combination of economic growth, earnings growth, and increased corporate spending on deals and technology should provide a supportive backdrop for investors. Of course, risk remains. Policy uncertainty isn't likely to go away. Plus, the Fed's focus on its dual mandate of employment and inflation has led to divisions among the voting members and creates an unclear picture of how aggressive the central bank may be when cutting rates in the upcoming year. Foreign risks remain as well, with ongoing conflicts in Europe, the Middle East, and the recent actions in Venezuela serving as a continued source of regional instability. While the U.S. markets tend to react to these types of risk only when they impact the U.S. economy and corporate earnings, these sources of geopolitical uncertainty should be monitored as they could negatively impact markets in the future. Despite the risks, a dramatic shift in the big picture doesn't appear likely. A modest economic slowdown is anticipated to start 2026 with a rebound later in the year. The slowdown in the labor market will be felt in the first half of the year and will have an impact on consumer spending. But strength in the high-end consumer and continued spending on artificial intelligence build-out should keep growth in positive territory in the early part of the year. The 75 basis points of Fed easing in the fourth quarter and stimulus from the One Big Beautiful Bill Act should power growth in the second half of the year. As pertains to the market, we remain in pretty good place to start the year. Market fundamentals were impressively resilient throughout the course of 2025, with further improvements expected for corporate earnings. Risks always exist. Despite them, the economic background is still supportive for investors. The most likely path forward remains continued economic and earnings growth, leading to market appreciation in the year ahead, despite the potential for short-term setbacks along the way. This year will surely bring a new set of surprises to consensus views. As we learned in 2025, these periods tend to be full of investment opportunities. While short-term headlines may introduce volatility, staying focused on big-picture fundamentals provides a clear guide for portfolio decisions and opportunities to take advantage of these periods. These things I mentioned above leads into the power of what Midwest Financial Group has to offer with the investment committee and how they review portfolios quarterly. Being able to make decisions based on what's going on, and doing so allows us to be at the forefront of how we manage portfolios. Another thing to think about and always look at is base your dollars and how you invest them on your goal and your time frame. If we can be of help, let us know. Thank you.